Welcome back. This is Toby Mathis, and today we're going to go over 3 steps to start an LLC for your rental properties. And this is for you landlords out there, real estate investors, and you understand the benefits of setting up an LLC. So we're going to dive into the precise components that you need to do to actually set it up. So before we get there, real simply, why do we use an LLC? And it kind of goes like this. So first off, we're going to go over 3 steps. But why? That's the big question, is why would we go through a process to create an LLC? And so I'm just going to kind of put it up here like this. Let's say that we have a rental property. Let's say that you buy a rental property in the Midwest, $100,000. What's the worst thing that could happen, right? So let's say that I'm a surgeon on the coast and I buy a rental property in the Midwest. What's the worst thing that could happen from that transaction? And a lot of people say, well, you could lose the investment. That's not it, actually, because what ends up happening is, let's say that you're out here and that property, let's say that we have a fire. So I'm going to use my, and it burns down and hurts somebody. That liability, what we want to make sure of is that it cannot come out here and go get your assets. Because if you don't have protection around it, what will happen is a plaintiff will assert personal claims. There's no difference between that property and you, and they could go and try to garnish your money for the rest of your life, right? Unless you go bankrupt, or there's got to be something that stops it. So what that LLC does is, let's just use we'll use a blue box. What that LLC does is it traps the liability inside the box. So if we set up an LLC, so this is an LLC, and that liability bounces back and stays inside this box. In other words, they could take the property, but they can't get to you personally. And that's why we use the LLCs, and that's why they're so critical. So how do you set one up? Well, step number 1 is you got to decide, where am I going to set it up? Where am I going to structure this? LLCs, it stands for Limited Liability Company, and it's a creature of state law. It's not a federal designation. There's not even a tax designation for it. In other words, there's no such thing as an LLC IRS form. You actually get to pick how you want it to be treated by the IRS. But from a state standpoint, you get basically 50 flavors, and there are differences amongst the different states. Now, I'm one of those guys that's going to say, hey, while I love looking at different states like Wyoming and using them for specific purposes that suit my needs and my clients' needs, for real estate, chances are you're going to have that LLC in the state where that piece of real estate is located. Now, I just burned that one down, but pretend it's a nice piece of real estate. You bought a nice rental property, and you're more than likely going to be setting up that LLC in that jurisdiction. Now, there are people that will tell you, hey, let's set it up in Wyoming and foreign file it in that jurisdiction. And I'm going to say I'm not going to agree 99% of the time on that, because it's not really going to help you. When you're local and that property is in that particular state, they're going to use that state law to comply. So like, even if you foreign file a Wyoming entity, for purposes of the liability, we're using that particular state law, not Wyoming, because it's foreign filed as doing business in that state. You're still subject to that state's laws. So I'm not going to generally say, let's set it up in Wyoming and foreign file it. What I would say is, let's set up a LLC in that jurisdiction where that property is held, and maybe we have that LLC owned by a Wyoming LLC. That's a second step. Like, if you want to really get technical, what we could do is have this LLC owned by a holding LLC in Wyoming, if you have enough properties. I wouldn't do that with one property. More than likely, I would just set it up and have that single property isolated. Because if it's just one property, it depends on the value, depends on what other assets you have, it depends on whether you're in a litigious profession. Like, for example, if you're a surgeon, then maybe we're going to put that in there earlier than if you just had a regular W-2 job and didn't have a ton of other assets, but you were just, starting off as an investor. But at the end of the day, you want to keep it fairly simple. So that's number 1, is where do we want to set it up? Once you determine, hey, I have a property, let's say it's in Indiana. Okay, then I'm going to set up an Indiana LLC. That's step number one, is let's figure out where we want to do it. Step number two is let's file it with that state. Let's go ahead and pay the Secretary of State, and that's what you're doing. You're basically paying. It's almost like insurance. I grew up in Philadelphia, and so in Philly, like it'd be like if some guy walks up and says, hey, you know, you have great windows in your store, you want to make sure they never get busted. You know, the way to get them busted is not to pay the guy, right? No, there's protection. You're paying for protection, right? With the state, you're paying for protections underneath that LLC statute that says, hey, liability is restricted to whatever the assets are inside there, and it keeps you separate. That's a big one. Now, I will say that the opposite can be true. Can we protect the LLC from you? Yes, but you're going to have to go to a specific jurisdiction like Nevada or Wyoming to get that. That's where we do the holding companies, because we're worried about something happening in your personal life where they try to take away your property. So we want to have it both ways. But for this, hey, we're setting up a property for a single rental property. Let's just set up an LLC in Indiana. We're setting it up. Great. We file it with the state. And then we're doing number two is we're letting the IRS know of its existence, and you're getting what's called an employer identification number, an EIN. And you're basically saying to the IRS, hey, this exists, an LLC. You guys don't recognize it. Here's how I want you to treat it. And a default designation when you're a single owner of an LLC is that it's ignored. It's called disregarded. So it's disregarded for federal tax purposes, which means it's no different than if I own that property in my own name for tax purposes. So we're making sure that the feds know how it's treated. Now, if it's husband and wife in a community property state, you could still treat that as one person. Husband and wife in a separate property state, you're probably going to be calling that a partnership. Ooh, and that's where it really makes sense to talk to somebody, guys. Some of you guys are already probably going EIN, state, oh gosh, what do I do? Here's what you do. Type in consult down in the comments. Just write consult, and we'll have somebody talk to you and let you know in your situation what's appropriate so that you can make the best steps, or just take care of it for you, whichever you want. But you can just write consult down below. So there's the state, there's the feds, and now we need to let the world know that this property is held by an LLC. So we're going to want to transfer that property. So we figured out where we want that LLC to be. That's step number one. Step number two is we file it, and we let all the relevant parties know how this thing exists. We let the state know that we want that protection by paying their fee and filing their documents with the state to create it and organize the LLC. We're letting the federal government know, hey, we want a tax identification number for this. It's separate from me, and here's how we want it taxed. And then we're going to the county where that property is held, and we're changing the name into that LLC. Now I'm going to put a big old caveat here. Some counties, like where I live in Clark County, Nevada, I can transfer properties into an LLC without any tax implications. But if I take it out, there's a tax implication. There's a cost. So sometimes we use a land trust as a buffer to avoid those fees. Some places, like is Florida, Pennsylvania, for example, you transfer it into that LLC, you have a taxable event that could cost you a pretty penny. In Florida, for example, you have dock stamp fees, you have reassessment. Pennsylvania, they have just a transfer tax. In Nevada and in a lot of different counties, there's sometimes a transfer tax, depending on what going in or out. So sometimes we're using a trust as a buffer so that instead of going straight into the LLC, we go into a land trust, and then that land trust beneficial interest is held in the LLC. It gives you protection. Or if you're like in Florida, there's actual protections similar to an LLC for a land trust. Now I know I may have just lost a bunch of you guys there. This is why you talk to somebody who actually knows what they're doing, and they could say, where's the property? What are you doing? What is the best structure for you? But let's say that you already know that, and you're like, hey, I'm aware that I'm going to set this up. I'm going to set it up. Let's say I'm in Texas. I know I'm going to set it up in Texas. I file it with the state of Texas, the Secretary of State's office. I let the feds know that, hey, ignore it. It's going to go onto my tax return, so there's no tax return filed for that LLC. And I transfer the property into it. Then we get to number 3, which is creating a body for it. So creating a body for it really comes down to this. If there's no operating agreement, if there's no filing with the state, if there's, like, let's just say that I set something up, I set up an LLC and I never paid another fee again and the state defaulted, they're looking at me. They're going to ignore the LLC. It's called piercing the veil, and they're going to go right to me. Or if I alter ego, like I commingle all my money, it doesn't have a bank account. So what we want to do is create a separate body that's recognized by the courts for that LLC. And here's how it is, real simple. I need an operating agreement that gives this thing a body. So I file it with the state, and I create an operating agreement. I let the feds know. I transfer the property into it. Voila. Now I just have to maintain that LLC. And the way you do that is you keep books and records. I keep separate financials. In other words, if there's no financials for this, they're just going to look at me. So I need to make sure that they don't look at me, right? I want to make sure that it is separate from me so that if something bad happens on that property, that they can't come to me. So the way I keep my separateness is, number 1, I set up an operating agreement. Number 2, I set up good books. And books just means I keep a track of the income and expenses separately. It's assets and liabilities separately. So it's profit and loss and a balance sheet. That's all it is. Every business needs to have one. Every LLC needs to have books, depending on how it's being maintained. You want to keep separate books so that the separateness of it is recognized by the court. There's an old adage. The amount of respect you show your entity is the amount of respect the court will show your entity. And if you ignore your entity, so will the court. So you want to make sure that you have operating agreement, books and records. I would say that most of the time you want to have separate banking. There are situations where you don't need it. If you have a structure like this, for example, it may be enough to have a holding entity that has the banking account, but you want to have it something that is not going straight into your personal bank account. You need to have a buffer bank account. So you want to make sure that the banking is separate. You want to make sure that you're tracking your deductions and that you're keeping track of here's the repairs and expenses associated with that property, separate from all of your other assets. In other words, if your checking account that you use to buy your groceries is the same account where you're covering repairs and any expenses associated with that rental property, you're probably going to have an issue because you've ignored the entity. There's a good chance the court might say, you ignore it, I'm going to ignore it. And we don't want that, right? We want to make sure that that LLC is recognized. And then you keep annual compliance. And what does annual compliance mean? It means paying the Secretary of State if you have to. Not all states require annual payments, but most do. So you want to make sure that you keep it in compliance. You're letting them know who the manager is or member, depending on how you structure that LLC. And again, if you have questions on this, because this is going to trip some of you guys up. There's member-managed LLCs. There's manager-managed LLCs. What's appropriate for you? It really depends on what you're trying to accomplish. I would just type in consult down below. We also have a free tax and asset protection class just multiple times during the month, almost always on Saturdays. And I'll put a link to that in the show notes so that if you want to attend a free one-day event, and this is a full day where we're going into all of the nuances of why you set up a structure, the way you set it up, and how to set it up, that you can go ahead and click on that and join us for that. That's absolutely free. It's called the Tax and Asset Protection Workshop. Anderson's been teaching it for over 25 years. It's a great place to start, and you can go and get that for free right now, or you can do a consult, whichever one works for you. So we want to make sure that we're doing everything we can. So we set this puppy up. We have an operating agreement now separate for it. We have books and records that we're keeping. We're maintaining our compliance on an annual basis. We're making sure that we're letting the state know here's who's in charge of this thing and paying its state fee. We're doing everything that we need to. We're tracking its deductions separately. We're doing everything we need to now to keep that separate, and that's what you do. Now, I know, again, I said 3 steps to setting this up. What's number 1? Find out what jurisdiction. What's step number 2 is make sure that the property is transferred, that the feds know what this is, that there's an LLC, and that it's filed with the state. Number 3 is make sure that you're compliant, and compliance means giving it a body. So the operating agreement, books and records, banking, make sure that you're tracking your expenses separately, and make sure that you're keeping it compliant. You do those 3 things, you're going to be good as gold. And if you fall short on any of those, it may not be fatal, but you want to make sure that you're doing your best to keep it compliant. And again, if you want to talk to somebody, just write consult down below and we'll send you a link so you can set up a complimentary consultation with somebody at Anderson so that we can make sure that your LLC is set up appropriately and answer your questions and make sure that you're pointed in the right direction, or that we could just handle it for you if you'd prefer that. Guys, if you can like and subscribe, that would really appreciate it. It helps our channel. If you have comments, go ahead and put them down below. If you think I missed something, or if you think that there's something that you want new explained, go ahead and put it down below in the comments and we'll respond to you. And share this with anybody that you believe would benefit. Thanks, guys.